He started 10 companies, 7 failed, 2 sold, 1 scaled. Then he bought the business, and then he got obsessed with self-funded search. Today's guest, Grant Hensel, he's running Entrepreneurial Capital to back gritty operators who are buying great small businesses at 3 to 5 times EBITDA. So if you're listening and if you're buying or backing boring profitable businesses, this episode will be a playbook. Thanks a lot for coming to the Holdco Builders podcast, Grant.
Thanks for having me. I'm very excited.
Please, let's start with you telling your background and maybe life before raising almost 11 million to invest in self-funded searchers. Yes, don't hold back. Give us stories, give us lessons, and everything included.
I was born in Chicago and I wanted to be an entrepreneur since I was 12, and that has never changed. I learned what an entrepreneur was when I was 12, and that was immediately the thing that I wanted to do. And I think I'm genetically incapable of doing anything else. And so that led to, as you mentioned, starting lots of different companies. And I sort of became a living statistic in whether it's better to buy or build, because as you said, the build track record is okay. 7 didn't go anywhere, 2 got acquired in small transactions, and 1 has done well. And I ended up through that journey realizing a couple of things that I'm bad at. One is anything vaguely related to doing a tech startup. I'm very bad at that. That was a lot of the failures. And then 2, I'm actually better at being a coach and supportive, helpful person to people who are operating businesses, like even better than operating them myself. Because Nonprofit Megaphone has a wonderful leadership team, which is the business that is scaled. It has about 60, 65 employees. And as I basically just kept delegating things that other people could do better than I could. And eventually it turned out that I didn't have any operational responsibilities at all because the team was so much better at each of those areas than I was. And so then that led us to like, okay, maybe let's buy a business. Because my wife worked in consulting at Boston Consulting Group, wanted to have more flexibility. And so I did the search. We bought a business that she now runs and just fell in love with that model, started investing in self-funded searchers, and now have raised a fund to do that in a more focused way. So it's been a fun journey.
Maybe you can share more about you actually buying the business. How did it all go? How did you find the deal? Maybe structure, financing, because it was your first deal and it obviously teaches us a lot, and slowly building you this track record, which is very helpful when it comes to what you're doing today.
Absolutely. We set out to buy originally any business that could be run remotely. Nonprofit Megaphone is a fully remote team, and we wanted to match that with the business that Julia bought. As time went on, we went to LOI 4 times. We submitted 4 LOIs. 1 did not get accepted. The other 3 were accepted. 2 fell through for just hilarious reasons. Like 1, the business was counting debt that it was taking on as revenue by accident. And so the accounting was all wrong, and that, of course, fell apart. But as time went on, we ended up zeroing in more and more onto what we already knew. So Nonprofit Megaphone is a marketing agency, and we basically realized through the process of searching for a business to buy that we wanted to buy another marketing agency, because it's a big swing to buy a business, and we wanted to do something where we could have the deck be stacked in our favor as much as humanly possible. And I don't recommend actually marketing agencies to most people as acquisition targets, but since I had done that for the past 9 years, we sort of felt more comfortable in that arena. And ended up finding the business through Flippa, of all places, which is like a broker website for typically, e-commerce websites or content sites. So it was very atypical to find an actual operating business on Flippa, but ended up being a great process and great transaction. And Julia is doing a great job running that organization and leading that team now.
You mentioned not maybe a best idea for people to go and buy a marketing agency, but you, as you said, I think you have like a 9-year experience doing this. Could the lesson be that the expertise actually about the industry and the market and the business overall is the lesson of why folks
Yes.
who haven't done it shouldn't buy that?
Yeah, I think that's often the case. And it's hard to tell because everyone always thinks that their industry is a special snowflake that no one can possibly understand. I do think there are unique aspects of marketing agencies that make them hard to buy. It's very easy to buy a job that's masquerading as a marketing agency and that's not an actual business. which I think is less true in some, like it's harder to, if you have an HVAC company with 20 people, it's probably not a job. Like it's probably an actual business. There's probably something going on there. But if you have a marketing agency with 20 people, it might still be a job. It might just be a really good individual person with a bunch of helpers. And if you take away that person who happens to be the owner, the whole thing comes crashing down.
And if you take your experience and this company you bought post acquisitions, maybe first 30, 60, 90 days, again, with all your experience, what did you change? What did you improve? Like how much you were able to give to make it better?
The first thing that Julia did is implement EOS, which is there's a book called Traction, which is a wonderful resource that is sort of an operating system for how to run small, profitable businesses. And I helped her implement that, and they've continued to implement that. And that was enormously helpful because you start with the leadership team and you basically talk about like, okay, what are we trying to accomplish? What are the metrics that are most important to us? You create a weekly scorecard, which has typically 7 to 10 metrics, 8 to 12, somewhere in that range. Each metric has a person who's responsible for it, who's one of the members of the leadership team. It has a goal, and you start reporting on that. You have a weekly leadership team meeting. You start reporting on that each week, and you start to get, like, that's why it's called traction. You start to get traction where everyone sort of knows what's supposed to be happening, and you start moving in the right direction. You identify issues that need to be solved, and those are talked about in the leadership team meeting. And once the leadership team gets that rhythm down and gets the process down, you can then roll it out to the rest of the team, which Julie's now done. And it's just a very helpful way to make sure everyone's on the same page, rowing in the right direction, and knows where we're trying to go.
Just so I understand correctly, you had like 2 companies in your portfolio before starting Entrepreneurial Capital Fund 1. One which you bootstrapped, started yourself, and another one you acquired, right?
Exactly.
How much time did it require from you and your wife to manage all this? A quick break. This is a special one for the buyers and the backers. And CapitalPad is where they meet. CapitalPad is the SMB investment platform that connects accredited investors with acquisition entrepreneurs, so more great small businesses end up in the hands of capable operators. If you're an investor, you'll see curated opportunities with clear thesis. But if you're a searcher, you'll find capital partners who understand rate environments, governance, and the grind of the year one. Nothing here is investment advice. Make sure you do your own diligence. But if you want to learn more about CapitalPad, hit the link in the show notes, create a profile, and help power the next generation of SMB owners. That's capitalpad.com, or just take a look at the link in the show notes. Now, back to the show.
So Nonprofit Megaphone is interesting because it has a wonderful leadership team who is, I'm helpful, but like they are running the business in a very real way. Julia runs her business entirely without my help. We talk about things, but like she's highly self-sufficient and runs her business very independently. And then the question, which you didn't exactly ask, but one of the things that we thought about is, do we make more wholly owned acquisitions and sort of build out a holding company? Or do we do what we ended up doing of investing as a minority investor into other people's transactions? And basically the logic was, we believe that the search, like the operator who's running the business is an extremely important piece of the puzzle. I have a lot of friends who own holding companies, and I'd be curious actually how this relates to folks you've had conversations with. But oftentimes the conversations are about either they have an operator who's doing a wonderful job and wants to be paid more, or they have an operator who's doing a very bad job and needs to be replaced. And it's always like one of those things. It's hard to have something sort of in a perfect spot. And I knew that Julia, she's my wife, we've been married for 8 years, like I knew that she would do a great job, but there wasn't like we had a long list of people that we thought would also do a great job and that they would be deeply aligned to the success of the business in the long term, and that, you know, you could just sort of like create an economic arrangement and then not have to change it in the future because it would work for everyone for the long term. And so that was what ended up leading us ultimately to this whole self-funded search approach. And also because you can hire people, if you hire someone to run a business, it's just tricky, you know, because there are all kinds of people that interview very well and are very convincing, and then they absolutely run it into the ground, or don't have the grit or the entrepreneurial spirit that's required. And we like that in self-funded search, the person who wants to run a business has to go out into the world and find a business to buy, which takes a ton of grit and takes a ton of entrepreneurial energy. And many people fail at that. Like probably less than half actually succeed in buying a business. But the half who do have gone through a trial by fire that we really appreciate.
How does your research process look like when it comes to choosing and actually going on with this opportunity? Because there are so many different ways and different opportunities you could pursue. Like you could go deal by deal, you could raise a PE fund, you could, I don't know, buy like competitors of your marketing agency. Like what's your thought process, and what were you thinking, and how long was this process before actually going and start raising this fund one?
Yeah, definitely a longer process because so after we bought the business that Julia runs, which is called Lexigate, I then said, I want to do more of this. But for the reasons we just described, I want to have operators who are like, who care much more about the business than I even do. Like that's what I want. And so started investing personally in people doing self-funded search transactions, just individually, like me as a person writing for relatively small checks. And that was fascinating because I ended up seeing great deals despite just being an individual investor, not with a fund or anything. And I started sharing deals with mentors who I've known for years, and they started investing in some of them. And eventually, though, they said it's a lot of paperwork. Like just saying yes and doing the paperwork to actually invest takes hours and hours on average, which is funny, but it just is the reality. And so they ended up coming to me and saying, like, this is wonderful. We're seeing great, like, thanks for these deals. This is so great, but like, this is a lot of work. Why don't you create a little vehicle and we'll invest in that and you can do all the work? Like, how does that sound? And so that's sort of how it evolved organically. Yeah, and I also would not have been comfortable raising money to do something that I hadn't done a lot of personally. Like, I've run a small business for a long time. We'd bought one. We'd invested in them personally, and that made me feel like, okay, I think it's now reasonable to say, let's do this with other people along for the journey as well.
How many investments did you do before raising this fund one?
11.
11. And how has it been so far? And is your thesis about which is a great investment, which is a great business? How has it been so far?
It's been good so far, which has been interesting because I did so much less diligence than we do now on my personal investments. We talked to people, but like I didn't meet any of the searchers in person, hardly ever. Didn't do intensive diligence on the industry or the business. Or just sort of like the overarching thesis for my personal investments was, does this seem like a capable person who is aligned with investors buying a reasonably well-structured business that should be reasonably resilient? And interestingly, that has gone surprisingly well. Like the portfolio is doing well, which is almost surprising to me based on the like relatively light diligence effort that we did compared to what we're doing now. So that's been pleasing. There have been learnings though. So the fund has 4 main criteria that it looks at when screening initial opportunities. And the 4 criteria are low customer concentration. We don't want you to have a couple of big customers that could leave and that kills the business. Low capital requirements. We want you to be able to distribute your profitability, not have to constantly reinvest it. Low cyclicality, which is one that I underappreciated originally and now appreciate in a much more visceral way. You want a business that even if there's economic uncertainty or tariffs or things like that, where people are just a little bit more nervous, you want the business to be very resilient in the face of that. And then just history of profitability. And we, as you mentioned at the beginning, we don't want to pay more than 3 to 5 times earnings. And we're looking for businesses with at least $750,000 in pre-tax earnings. And so that was sort of the thesis going into the personal investments, and it evolved a little bit through the personal investments, but I think I came to appreciate especially the economic cyclicality aspect more, because we have one personal investment that's having a harder time, and that's the reason why.
One thing you brought out from when it comes to low cyclicality was like you brought out low cyclicality. What have been the lessons on this for you? This is something you mentioned.
Yeah, the lesson has been an attractive purchase price is not sufficient to compensate you for exposure to economic cyclicality. So we invested just personally in transactions that were closer to the 5x end of the spectrum, but businesses are very economically resilient, and that really do not like. We have one that distributes fans to chicken coop operators, like motors for fans in chicken coops. Chicken consumption is pretty resilient. The coops need fans, and they're a distributor of them. Um, and like actually a very resilient supply chain to tariffs and so forth, and it's wonderful. And that was a little bit of a higher multiple, but deeply resilient. Um, Whereas, yeah, there's another business that we invest in that was a little bit of a lower multiple, and it's going to be fine. Like the searcher's incredible. He's like one of the most incredible people I've ever met. So it's going to be fine. It's just going to be a longer journey and a more difficult journey, including for the searcher, which is tough.
Time-wise, how long it took for you to go from getting those comments and questions from your mentors that can you do it for us to actually closing the fund one, which you did. I think I have a tweet here you posted on July 29th, so like 2.5, 3 weeks ago.
Yeah. So they said they made those comments, I think, in October of 2024. And then we started fundraising in February of 2025. And I expected it to be an 18-month process because that's what people say. They're like, it takes 18 months to raise a fund. And it ended up taking whatever July to February is, or February to July is like 5 months, something like that, which was really encouraging.
Uh, Before talking maybe about the lessons about fundraising, how much did you have committed from the investors, from the ones you knew, before you started looking for new people and I don't know, building rapport with the new ones who don't really know, didn't really know you before, or how was it all?
So it's funny to think back on the initial encouragement from the mentor people who are like, you should just do this. Like, we would totally invest in this, ended up being like 3% of the total capital raised.
Whoa.
It was not the majority, anywhere close. But it was the encouragement that I needed because I just assumed, like, I don't know. It didn't occur to me that there's this concept called first time fund because I was like, I don't have a track record. And they're like, well, no one who raised a first time fund has a track record of doing their own investments, or of doing fund type investments. And it's actually encouraging that you have done a bunch of your own personal investments. So that was just a very helpful, encouraging push. They said that I started preparing, started writing, creating a deck, and made a list of people who I knew and thought really highly of, who I started sharing the deck with and asking for advice. The classic line, ask for money if you want advice, ask for advice if you want money, is absolutely true. So started asking for advice, started getting commitments of money. And then once that became I can't remember how much it was, but once we had a couple of $1 million committed, I then started sharing more publicly, saying, hey, we're raising this fund. This is how much we have soft circled so far. And we'd love to chat about it. We ended up doing a webinar, which was surprisingly effective. And then things sort of snowballed from there much faster than I expected, to be totally honest.
And any more, like you brought out webinar, this worked well. You started, I guess, posting on Twitter. Any other tactical takeaways or lessons from this journey since you started raising capital? Another quick break. If you're running a Holdco or operating a newly acquired business or just manage a portfolio of companies, you need trust, you need deal flow, and talent coming to you. There's no other way around it. That's where Spacebar Studios comes in. They're a done-for-you newsletter service for different companies. Imagine a crisp monthly update that makes sellers forward your name, LPs feel informed, and customers remember you. And candidates want to work with you. No more "we should write more" guilt. Spacebar turns your insights into consistent, compounding attention. If you're serious about sourcing, credibility, and community, Spacebar Studios is an unfair advantage. Check the link in the show notes, mention Holdco Builders or Private Equity Guy, and get your first additional roadmap and the first email on the house for free. Again, check the link in the show notes. And now, back to the episode.
LinkedIn and Twitter, especially LinkedIn actually, were surprisingly helpful resources in a way that was shocking. LinkedIn was a wonderful way. Twitter was a great way to meet new people who were interested in the asset class. LinkedIn was a great way to let people that maybe I'd met 10 years ago know, hey, I'm doing this new thing. And a lot of those people ended up saying, like, we'd like to participate in this. This would be something we'd like to be involved in, which was really humbling. And I think I underappreciated how powerful a tool LinkedIn is for reactivating, dozens or hundreds of relationships of people that you've met a long time ago, or I've met a long time ago, but maybe hadn't been in that close of contact with, but still really thought highly of.
And during that time, were you already positive that you're gonna succeed in raising capital, and did you start already looking for deals as well?
Definitely started looking for deals. I think that until it was done, or I'd say until once we got to like $5 million, I think I started feeling like, okay, we're probably gonna make it there, hopefully. And yes, and I was looking for deals the whole time, because one of the things that I think was genuinely helpful in this process was, even if the fund was unsuccessful in being raised, I still plan to deploy very meaningful personal capital into this asset class because I just love it and I believe in it so much. And so I was absolutely looking at deals throughout that process, because it didn't, like, even if the fund wasn't raised, I'd still be investing in this stuff.
Now, I was doing this research and I wrote down, like, I want to know how Grant picks winners when it comes to those searchers. So what maybe signal most reliably tells you self-funded searcher will close and then operate well?
The signal that we appreciate the most is a sense of what is actually important and a relentless drilling into that. There's a searcher that we're in the diligence process. Like, we've made a commitment to him. He's in the diligence process now, and we're in the diligence process alongside him. And he is spending a lot of time at the physical location of the business that he's working on acquiring, meeting the team, talking to the seller, like spending weeks there, just hanging out and learning how things are rolling. And not every seller will let you do that, but it speaks volumes that this searcher's been able to build a relationship with the seller where the seller's comfortable with that. Now he's like becoming friends with all of the team pre-close. And that is awesome, because it is the type of non-spreadsheet, non-like deck diligence and analysis that teaches you like what the actual reality is. And it's just brilliant. Like, that is so impressive. And we'll see how the searcher does, but I suspect it's going to be fantastic, because that is just such a smart way to approach the diligence process. Because diligence is basically figuring out what is the reality on the ground. And the best way to figure out what the reality on the ground is just to be on the ground as much as possible and observe things.
Where do you find those people? How do they come to you, and where do you go to find them?
All over the place. Search Funder is a great resource. It's a social network for people who are searching to buy businesses and trying to be active there. I do webinars. We had a webinar last week about how searchers are trying to find off-market deals. We had like 160 searchers come to that. We have a newsletter called This Week in ETA, which we now have over 1,000 people, most, like the vast majority of whom are searchers on, that we send out once a week. And so it's just stuff like that, of like being out there, creating helpful resources for the community, and yeah, just chatting and getting to know people, including pre-LOI.
When it comes to doing diligence on those people, how do you test for integrity and grit without relying on just vibes, if you can say that?
We love the search process as a grit test itself, which is the nice thing, is it takes a ton of grit to say, I'm going to spend probably like 18 months searching, probably at night after my day job is done, or maybe I've quit my job and I'm living on savings, and I'm just going to go out there and talk to business owners all day, every day, and see if I can figure something out. Like, that to us checks the grit box if someone can successfully buy a business. The integrity thing is we just try and vet every single thing the person says, like everything they put in their deck. Can we back it up? We try and talk to as many references as humanly possible from the person. We have a decent sized LP community, like, of investors in the fund. And we ask those people for perspectives, like, hey, this person is buying a business. Does anyone know them? Does anyone know anyone who knows them? Anyone have any mutual LinkedIn connections? We would love to just try to get a sense of like who this person is that we can triangulate. And that's been enormously helpful. we've gotten actually great intel from people who know someone who knows the searcher.
Have you passed any deals on solely to the person?
Yes. Yes. And the biggest reason for that is that the searcher has a ratio of confidence to competence that we feel is out of whack. So highly confident without, like, big hat, no cattle. We don't like that. We think that that type of person is very likely to run into a brick wall by accident when they're operating the business because they're so confident that they know exactly what they're doing. And they just don't because no one does. It's impossible to know as you're coming in new. And that is a major warning sign for us that we wouldn't want to be part of.
How many, and if you even get those, like just the deal, but without an operator, and then you have to start looking for a person like a perfect match for this business, maybe. Is this the case as well?
Almost never for us. It's basically because we don't do that. It's similar to like the famous ad that Warren Buffett had back in the day is like, opportunities must come with management. We can't supply it. That is the case for us. We want to invest in searchers who are buying something. And so every once in a while, someone will send us an opportunity. And then we would probably send that to one of the searchers that we've been talking to say, hey, maybe you want to take a look at this thing because we're not going to be the one to be the primary owner operator.
In the process today, when it comes to what you do on day-to-day basis, on what you're spending the absolute most time and what is maybe something you stress the most about?
I spend most of my time digging into deals that are under LOI that it seems like are potentially a good fit. And now we're trying to get to know the searcher. We're trying to do our own diligence alongside, trying to get the perspective of our investors just to see if they have thoughts or comments. We have like an advisor group that we have really benefited from them sharing their perspective. So it's primarily that, and then also actually marketing of let's do webinars, let's do social media content, let's create resources for searchers, because at the end of the day, that's our main job is attract deal flow and then analyze it. And I expect we're early in the fund life. The fund hasn't made any investments yet, but once that happens, there will be a third category, which will be supporting our existing operators who we've already invested in.
If you would take your perfect scenario or maybe the goals you've set to your investors, how many deals would you like to do ideally per month?
We would like to do 13 to 18 total deals over our investment period, which is 2 to 3 years. So call it like 6 a year. So in a perfect world, 1 every other month.
Do you see there is enough deal flow, enough great people to back?
That has definitely been the case so far. We're seeing roughly 1 deal under LOI per business day has been the average for the past couple of months since we've sort of been like officially public that we've raised a fund and are ready to roll. So that's pretty good because if we see 250 a year and we pick 6, we feel quite good about that being more than enough deal flow to be very selective.
I'd like to go maybe more specific, ask a few questions about sourcing and seller conversations, like 5 questions to a seller when we take like pre-LOI. If you could ask, again, only 5 questions from the seller, which 5 and why?
Yeah, I would ask, can you tell me the story of your business? How did it start? How has it grown? What ups and downs has it gone through? I would say, why are you selling now? And what's driving that? I would ask, what are you most looking for in a buyer? With the answer there being, I'm hoping that they're saying that they're looking for a specific type of buyer and not just that they want the highest price and that they don't really care about like what happens to the team or the business after that. I would ask, can I trust you? Which is a strange question, but I just think it's interesting to see how people respond to that. And then the final thing I would ask would be, do you have any feedback for me? Because I'm just curious, like, will they level with me? Because everyone has things they like and things they have reservations about with a potential buyer. And I'd be curious if they're willing to share that with me, because I think it's actually quite a gift and sets the right tone.
Now, a few questions about your 11 investments you made, because this has taught you a lot when it comes to your next investments with your fund. So I found something which we've said, like Cockroach business, by like describing the attributes of a business that survives almost anything. Where do you find them and what type of businesses they are?
We think it's the four characteristics that we talked about a little bit ago. So low customer concentration, low capex, low cyclicality, history of profitability. If you're really looking for something that's even better than that, we'd say recurring revenue or reoccurring revenue, something like that. And then low single points of failure risk from other areas, like no one very major vendor where if there's an issue, that would be a problem. Reduced reliance on like a very small or a single key employee. Yeah, you're basically just looking for a business where it's probably not going to grow spectacularly. It's not going to be the next Facebook, but it is in an industry that is highly resilient, that has a highly resilient set of partners, whether it's vendors or employees or customers that it works with, and that it's an industry that's embedded in, and that it's just probably going to be profitable and stable for a very long time. Like no possible AI risk in any kind of near-term time horizon. Like chicken coops fan motor distribution is not going to be disrupted by Silicon Valley startup. Like that's just not going to happen.
And when you take those 11 investments, how involved? Obviously, not too much, but what have been your own maybe lessons and ideas for those operators who run those businesses and the investments you've done so far to make those businesses better?
Our primary goal has been trying to be a helpful, supportive, encouraging investor who provides help where asked and doesn't try and impose themselves, especially because my personal investments are relatively small, like very minority checks. And so it's not my role to be, I'm not on the advisory board of any of those. We will be with all of the fund investments, and it definitely will be because we'll probably be the lead investor in most of them. And so that'll definitely be more of our role. But I basically want to be the investor that I wish I had if I was a searcher. So someone who's helpful, someone who's encouraging, someone who's happy to make connections and share experiences where needed. Not advice, but like experiences. So not saying I think that you should do this, but saying like, I was in a similar situation once, this is what I did, and you can take it or leave it because you're the man in the arena or the woman in the arena, and I am not. And so I trust your judgment that you can take anything I might share and know how to apply it or if to apply it in a way that I probably don't fully appreciate.
You mentioned that you're willing to back operators which would like to buy in companies which do more than 750K in profit. What type of businesses you're looking for? Like industries, markets? US is huge market, like location-based.
Yeah, open to anywhere in the United States, and actually technically Canada as well, although we expect the vast majority of our investments to be in the US. Most of the common ETA industries, so home services, there are many attractive businesses in that universe. Sometimes B2B services, depending. There's a lot of thought that has to go into that. Sometimes light manufacturing. We like that if the searcher has a deep manufacturing background themselves. We're nervous about it if the searcher has never run a manufacturing business or worked in one in a meaningful capacity. We hate e-commerce, I'll just say. We think that it's highly capital intensive because you constantly need to be buying inventory. It's extremely competitive, and you're often reliant on a particular advertising channel working in a way that can be very volatile. So we don't like anything even vaguely e-commerce related or like retail related. Obviously restaurants are a historically awful business that we don't want to touch with a 10-foot pole. But like we looked at a business that does sewer repair and replacement. And it's like, okay, that's fantastic. Like that is what we're looking for.
When you look at your team, yourself, what do you think will be the biggest value add for those people you start working with post-acquisition?
I think the biggest value add, our hope is that the biggest value add is that we are someone who the searcher can talk to, who can be supportive and encouraging and empathetic in the moments of most pain and suffering, which almost always happen in self-funded search. It's just part of the game. And we've been through it. Like I've been through it, starting Nonprofit Megaphone and working on growing that. I've seen my wife go through it with the business she's bought. I've seen other searchers go through it. And I think that is an underappreciated aspect of this whole game, because if you buy a business, there will be times where it will not be going well. And that just is a very painful feeling because you feel trapped. You've taken on an SBA loan. You really don't have any way out. You have to go through, and you want to have people with you in those moments of darkness who have, one, gone through themselves and seen that there is light at the end of the tunnel, and that can be genuinely helpful and genuinely encouraging in that process. There's lots of tactical ways that we hope to be helpful, but it's like at the end of the day, the like mental health and resilience of the searcher is something that we think is underappreciated and deeply important.
I know you being roll-up skeptical. Why?
I'm skeptical. So I actually have only invested in one roll-up ever, which was personally in Sam Mahmood, who I think you actually spoke with on the show, he's a great guy. I am skeptical of people doing roll-ups who have not done a roll-up before and or who have not operated in the business that they're rolling up before. We view roll-ups as a higher risk, higher reward version of buying a single business, and we're already very pleased with the reward potential of buying a single business, and we do not feel a need for it to be more intense. It also changes the cash flow profile. Like typically with a roll-up, you're going to be reinvesting everything to add more acquisitions, and you're hoping to make most of your money on multiple expansion at the end of the day. We like that if you're buying a single business for 3 to 5 times earnings, like the math that we do is that if we can invest in a transaction where, if let's assume the business grows revenue by 5% a year, has no margin expansion, no multiple expansion, with standard self-funded search terms, that scenario can and should produce a 30% investor IRR, which we just think is excellent with 5% growth. And so we do not, and it's making distributions along the way, hopefully, like as long as, that's very comfortable and totally at the discretion of the searcher. But if after debt service, they're generating excess cash, maybe they make some distributions. I just love that profile dramatically more than the roll-up profile, which feels more venture capital-esque to me. And that is just something that I don't like personally. So even though lots of other people doing it very successfully, I'm just not one of them.
But still, you said you've invested in one, Sam Mahmood. Indeed, he was on the podcast and building a holding company in paving space. So why Sam, and why you decided to back him?
I've gotten to know Sam we're in the same Hampton core group, and so we spend time together every month. We've met in person. He just is going to run through walls to be successful. It's very clear. And having gotten to know him for an extended period of time, felt comfortable. And it's like, and I just want to be on the journey with him. He's an awesome guy, and I'm excited to see where it goes. And so he is, I think, potentially the exception that proves the rule, at least for me. And roll-ups are a wonderful strategy. Like a lot of people are very successful. It's just, I just don't like it personally for all the reasons discussed. But it's not necessarily a bad thing.
Again, now, when it comes to those operators you're going to back at the businesses you're going to invest in, have you already created some type of playbooks which you could use when it comes to those investments, or you start working on this once the first few deals are done and you see how the operators are doing, or what is your process there of actually doing it and again having this playbook?
Yeah, our approach, our strong encouragement for operators for the first 90 days, for example, is to just spend as much time as humanly possible in the weeds, figuring out where value is actually created and how that value is actually created. And this is great because the other thing you want to be doing is getting to know the team as well as possible. And this is a perfect way to do it. Social functions are wonderful, but it's great to see people in their environments actually working. How do they do their work? What is frustrating to them about their work? What do they like? What feedback do they have? How good do they seem to be at it? We've seen anytime searchers we've invested in have run into trouble, it's from being too academic and too removed early on in the process, where they're only talking to the management or leaders or whatever, and they're not in the trenches. You have to go immediately and deeply as far into the trenches as humanly possible and just ask tons of questions and learn. Because your first instinct is often to make a bunch of changes, but if you haven't spent the time in the trenches, you will not know what changes are right and what changes will accidentally. I chatted with a searcher who's a wonderful guy and is being very successful, but He talked about how he bought a business and he's like, like we're not managing our inventory tightly enough. We got to reduce the amount of inventory. We'll increase our inventory turns. Like that'll be so awesome. And what he didn't realize, and now did realize, and reversing, is that for a lot of their clients, they were a distribution business. The reason they did business with this company was because the company kept just lots of very slow moving inventory on hand. And so they could use it when they needed it. And that doesn't show up on any of the financial statements, but it's core to the value proposition. And so by tweaking to try and optimize his inventory turns, he accidentally massively negatively influenced the core value proposition of the business, which is just not what you want to be doing in the first 90 days at all. So as deep as you can with the team into operations, and then as deep as you can with customers to the extent that that's possible. You want to deeply understand what is actually happening here before you try and change anything.
You post a tweet on this, like these 7 areas have defined the best of the best. Maybe you remember them by heart. Maybe you can open this tweet, but can you maybe share some of those takeaways? Because again, not many people have been able to meet so many searchers.
Yeah. Okay, I pulled it up because I don't remember it by heart. But the first one was people, just like we talked about with Sam Mahmood of the Pave, who are able to run through a wall to be successful. You get a very clear sense of that with some searchers. Like, this person is not going to lose. They are just going to make it work one way or another because they are a force of nature. And that is wonderful. And we love being in business with people like that. There's a searcher we invested in named Rob. This is personal investment, named Rob Brooks, who's fairly active on Twitter as well. He bought an HVAC company and he increased revenue 70% in month 2, which is wild. There's typically a J curve where you do worse in year 1 than all of the previous year. And then you sort of rebound and it starts to be good. And there's exceptions that prove all kinds of rules. He made a bunch of changes in the first 90 days for sure. He made changes in the first 30 days. But he was able to do that because he was so deeply in the trenches and seeing what was going on and going on service calls and going on installations that he was able to do that with confidence. And just through force of effort and force of like galvanizing the team and changing a lot of stuff, revenue is up 70% year over year in July, which is just incredible. Second thing is the best searchers know exactly why they want to buy a business. And a lot of it comes down to like, this is who I am. I don't want to work for someone else. I want to be in charge of my own destiny. And I have a burning desire to do that. And I will not stop until that happens, which we really appreciate. The third thing is that they are realistic. So they are not making projections that are showing, like 10% year over year growth and margin expansion and multiple expansion. They tend to be more focused on, okay, what is a very reasonable outcome? Let's say no growth, let's say 5% growth look like, and what does a downside look like? Because they know that if you protect against your downside, the upside will take care of itself. Number 4 is that they're not doing a roll-up. That's specific to us, and we've already talked about it. We just don't like roll-ups, but, to each their own. Number 5 is they're making close personal relationships with the seller by meeting in person. The example at the beginning of the person who's not only meeting with the seller, but meeting with the entire team in person, working from the location of the business during diligence is fantastic. It's all about, at the end of the day, building a deep relationship and a trusting relationship with the seller, because you want to find a seller who is choosing you for non-financial reasons and that is maybe turning down even higher offers because they know that you're the right person to steward their business into the next chapter. The 6th and the 7th are transparency. Everything has risks. It's good to talk about them candidly. No investor will be impressed if you just assume that there are no risks, because everyone knows that's not reality. And then finally, openness to feedback. The best searchers are learning machines, and they will talk to people and just drain them dry of possible insights and knowledge. And they'll process it all and they'll decide what they want to keep and what they want to maybe not apply to their situation, but they're constantly trying to learn from everything. They don't view feedback as an attack on their ego. They view it as a helpful resource that they're just going to turn into raw material to push them even further.
Next, I'm trying to understand how large of a difference a great hire could make. Again, not too long ago, like like 6 weeks ago, you posted, we hired a chief of staff for Entrepreneurial Capital 66 days ago. Life-changing. Well, not too many people can say about their hires that it's life-changing. Can you share the story of what happens and what was the decision behind this reason of hiring this type of person?
Yes, we hired Peter Vasilkiv, who's incredible, to be our chief of staff for Entrepreneurial Capital. And that, as described, has been life-changing because he has absorbed so many different projects and tasks and areas that are much too complicated to delegate to something like a virtual assistant, but absolutely need to be done. And he's just done a great job of getting in and figuring out and making things happen, it is quite rare and deeply wonderful when it happens. And he's allowed us to do so many, like we're redoing our website. He has totally run with that project and completely spearheaded it and making it happen. We have all kinds of conversations with pre-LOI searchers, and he's the first port of call. He's talking to like 20 searchers this week, most of whom are pre-LOI, to help us start building relationships with them so that we can be helpful to them once they find deals. It's just a force multiplier. Like the right person in a chief of staff / special projects type role is just a force multiplier beyond anything I could have imagined. And I've had all kinds of entrepreneurial friends who like, you need to hire for a role like this. You're an idiot for not doing it. And I finally took their advice, and they were absolutely right.
Okay, this is great. I'm thinking of this actually as well. A lot of things going on all the time, and I would need one Peter as well.
Yeah, especially if your content, you create content. There's a lot of ways that a support person can help with that. So,
now let's go back to the basics. Failure being the best teacher, and again, you've started 10 companies, 2 acquired, 7 failed, 1 still growing, like non-profit megaphone, 60 employees. But the big lesson for you from there was that it's maybe better idea to buy a business than start a business. You're saying on this tweet that it took you 30 years to realize. So talk about this.
Everyone's different. I'm uniquely bad at tech startups, and I struggle to truly help a business scale as the operating CEO when it reaches a certain point. Other people are better at that than I am. And so for me, it's been a journey of figuring out, what am I actually good at? What am I not good at? The stats as well for buying businesses versus starting them are quite clear that it is statistically a much better idea to buy a business, certainly than to do a venture-backed startup. Like the success rate obviously is dramatically improved by purchasing a business. And actually the economic outcome for the searcher is dramatically better on average, even if you take all the Facebooks and Ubers into account and you average it across everyone who did a venture-backed startup versus people who bought a business, especially under the self-funded search model. It is dramatically better idea on average to do the self-funded search model. And we think that there's great power in base rates and just like follow the things that statistically work. But yeah, I've learned an enormous amount through failure, and I'm sure I have many more failures yet to come that we'll hopefully learn just as much from. But yeah, for me, it's been a surprisingly long journey to realizing this is what I should actually be doing.
Grant, there are a lot of people listening, even though we are on minute 50. And if some people, if there could be searchers, there could be potential investors, there would be people wanting to do what you're doing, living life you're living, where they can find you.
Twitter and LinkedIn are the best places, at Grant Hensel, and LinkedIn /in/Grant Hensel, something like that. Thrilled to be helpful however I can be.
Now, 2 wrap-up questions I always ask, like, what is the best investment advice you've ever received, and what is your favorite book?
Yeah, that's a good one. My favorite book is Switch by Chip and Dan Heath, which talks about like how to change things, whether it's yourself or an organization or like a whole country. I also love Good to Great, and I also love Traction, just to be like honorable mentions, but I really like the book Switch as well. And then Sorry, what was the other question? Favorite book and
Best investment advice you've ever received.
yeah, yeah. I'm such a big Warren Buffett fan. Um, I'm such a big Warren Buffett fan, and I think his concept of like circle of competence and figuring out exactly what it is that you want to be very good at, and just trying to do that thing over and over and over again to get really good at it, I think is deeply insightful. Also, I'll say like honorable mention. There's a book called Seven Powers by Helmer, who basically talks about like sources of competitive advantage. Um, Warren Buffett talks a lot about moats. Like you want to buy businesses that have moats. And the Seven Powers book is the best book I've ever seen in describing what exactly are the types of moats that are possible. And he describes seven and has like very thoughtful economic rationales for why each of them are a source of durable competitive advantage. And I just think it's brilliant. I've actually gone through and looked at all of Berkshire Hathaway's investments to see like which of these had one or more of the seven powers. Like Dexter Shoe famously was an investment that did not work out and actually did not have any of the seven powers, like did not have any of those sustainable sources of competitive advantage that I can tell. Whereas like Geico has a ton of them. And so I just find it absolutely fascinating.
Do you still find yourself reading a lot at the moment, or you're more into the execution phase personally?
No, still reading audiobooks. But I'm a nerd. I love reading, and we'll see. I don't think that'll ever change.
Okay. Again, Grant, thanks a lot for doing this. I'm more than happy to do it again, like 12, 18 months from now, to see how has it all been, and more importantly, all the lessons you've learned. But again, thanks a lot for sharing your story today.
Absolutely. Thanks again.